the second part in the false breakout trading strategy video series. First of all, I'm just going to recap some of the important concepts learnt in part 1. The most important point to take away from part 1 is the order flow dynamics occurring at areas of breakouts, areas where we expect price to break out of. Now, I spoke about the two most common ones: swing high, swing low points, and support resistance zones. Now, we know that price will often accelerate at a breakout due to the types of orders sitting beyond the breakout area. This is because at a breakout area, stop losses are placed and breakout traders are looking to go long short. So this causes what I term the breakout rush. So if I go onto a chart, you can see this is a support resistance zone. Above this area, stop loss is going to be placed from traders that are short, because the way traders place their stop losses, the traditional way that comes back to the herd mentality, traders place their stop losses beyond support resistance zones and beyond swing high, swing low points. So it's logical to conclude that there's a cluster of stop losses placed there. Stop losses from short traders will be long orders. And likewise, a traditional breakout strategy is to go long on the breakout of a support resistance zone or a swing high, swing low point. So there's going to be a cluster of long orders from breakout traders stacked within this area above the support resistance highs. So that's why we get the breakout rush, because of the concentration of order flow beyond the breakout area. Long orders from breakout traders and long orders from stop losses placed by the traders that are short. So we know that this is strong order flow concentration. That's what causes the breakout rush. So if price then reverses this, it tells us that strong, in this case supply, must have come into the market to reverse the strong buying strength from the long order flow concentration that is placed there. So if price subsequently comes back straight away and causes a false breakout, then that tells us that the selling that came in up here must have been particularly strong, because we know that this is strong buying order flow, and the way price left this area, the breakout rush, confirms this to us. So in order to overcome that, the selling that must come in here, i.e. supply, has to be particularly strong. So if we go to another example of an actual false breakout, you can see we get the breakout rush. This is a very clear support resistance zone. We're at the 5th time back to it. The more clear it is, the more times it is hit, the more people are watching it. So the more times it's hit, the longer price has to build up stop losses. So the more times this area is hit, the more stop loss order flow concentration that is being built up. Because traders are increasingly going short in each test. Therefore, the cluster of stop losses that is being built up here is increasing each time. And the more clear it is, the more likely breakout traders are looking to go long here. Again, it increases the order flow concentration at this area. The more times it is hit, the larger the likely order flow concentration from breakout traders going long here. So we can see that we had the breakout rush, and then price was quickly rejected. Strong selling came in, caused the close back below this SR, and that is the false breakout. And it is these breakout traders who are then caught on the wrong side of the market. So therefore they are looking to bail out by exit their trades, and exiting from long trades is placing short orders. It's those orders, that order flow concentration, combined with new sellers coming into the market in this case, that causes the good momentum move down after the false breakout setup is complete. So breakout traders that are long here are looking to bail out as price moves against them. And of course, price closing back below the SR is a reason to start bailing out, because obviously it confirms that the breakout didn't materialize. And then new sellers will be coming in here on the close back below the SR. It's a sign that the SR is held and the price is more likely to continue lower. And of course we had institutional, professional, large money, whatever you want to call it, but supply coming in here to overcome this strong order flow concentration. So we still have professional selling going on down here, and that causes the good momentum move down following the false breakout. That's how we expect price to move following a false breakout. Okay, so in essence, all this liquidity that was around here, this order flow concentration, it was used by the large institutional, professional money to place their orders. Okay. On my first video, I spoke about how large players need liquidity, and it's logical to where to look for pockets of liquidity beyond breakout areas, beyond swing highs and beyond swing SRs, because that's the herd mentality approach, how people place their stop losses and place their orders. We don't need to see an order book. We can conclude that stop losses are most likely to be placed up here, i.e. there's going to be a large concentration of stop losses from shorts, and there's going to be a large concentration of long orders from breakout traders. Okay, so that order flow concentration, that increased order flow concentration, is just liquidity. Okay, and big players need liquidity in order to place their orders, i.e. they need the other side of the market. If you're selling, you need a buyer. So if you're selling 500 lots, if you want to get filled at the best price, you need someone to buy that from you. Okay, and that's all what's happening within this area here when institutional money is coming in, knowing that there is large liquidity there to be had from the retail traders, from the novice traders, and they're using that to advantage to get filled at a good price. Otherwise, they might not get filled, and that's where slippage occurs. So that's why I was saying a false breakout trade is essentially following the professional money, okay? Because the professional money is coming in here using the liquidity from the novice traders, the pockets of liquidity, the order flow concentration to get their orders filled, and therefore the false breakout setup completing itself, i.e. when it closes back below here, is us following the professional money for the follow through momentum. Okay? So that's just a recap from part 1. Now I'm going to talk about a bit more about false breakouts in depth, a couple of objective points to consider, and then I'm going to talk on the next video, I'm going to talk about support resistance, objective considerations, and then the video after that, part 4, I'm going to talk about swing, false breakout, objective considerations, and then finally part 5, we're going to talk about trade management, entry stops and exits. Okay, I'm splitting the following videos up into smaller chunks because some of these concepts are new to people, and it's important to understand them, and it's easy to do that if I split them up into smaller chunks. Okay, so the next topic is why a material false breakout. In the last video I said I'm always looking for a material sized false breakout, okay? So a material break of an SR swing point and then close back above below. So why am I looking for material false breakouts? Firstly, we have to be able to conclude that the breakout traders' orders have been triggered, okay? A major part of why a false breakout works and that momentum follow through we get after the false breakout setup completes is because those breakout traders are bailing out. Okay, so we need to be able to conclude that those breakout orders have been triggered. Otherwise, there is no false breakout setup, because you need them bailing out, the order flow from them bailing out to generate that momentum follow through in the opposite direction. Okay. I'll move on to the third point first. So stops can be placed in logical and objective locations. If you have like I don't know, it's all relative, but a 3-pip false breakout, there's a high chance that price might make another false breakout before moving in your direction. I.e. you might pick the right area, but you might not be picking the right false breakout bar. Okay, it increases the uncertainty when you have a small false breakout, and that makes it hard to place logical and objective stop losses. Okay, I'm not a mechanical trader, I'm not a rule-based trader or a system trader. I'm an objective-based price action trader, so I want to be able to put my stop losses in areas where, for that particular setup, I'm most likely to be wrong, and small false breakouts don't allow that. Okay, now going back to the second point, which is the most important point in terms of evaluating and analysing a false breakout setup: supply and demand consumption. Small false breakouts, particularly if the preceding move into the false breakout is impulsive or very strong trend-like, stands the chance of being supply or demand consumption, i.e. the uncertainty is increased with regards to whether the false breakout is a true rejection or a false breakout bar, or whether it's just supply demand consumption paving the way for another leg higher or lower. So if I take a step aside and talk about supply and demand consumption for a moment, if we look at this bar here, this is just a rejection bar, okay? If we assume there is demand down here, price gets rejected from the demand, okay? So what do we want to know now? We want to know whether this bar is what I call a true rejection bar. If it's true rejection, then price will move up, okay? So this bar is true rejection in terms of its signaling follow through momentum. We have the rejection from demand, price moves up. This is thus a true rejection bar, okay? Now, if price moves down, then all this was a demand consumption bar. And what do I mean by that? Well, if we take a step back and look at what happens when price hits demand or support in this case, i.e. not resistance or supply, each time it hits support or demand, it is consuming some of that demand, okay? If I go back to a previous example, if I go back to this example, for example, this is a resistance. Each time price hits this and gets rejected away from it, it is consuming some of the supply within this resistance, okay? That's why when we talk about price coming back to, the fourth, fifth, sixth time, it's getting weaker and more likely to cause a breakout. And it's one of the reasons why we trade the first time back strategy, because the first time back to this broken former support trend resistance area holds the strongest chance of there still existing that same supply-demand imbalance that caused the breakout. Strong breakout, strong supply exceeding demand. The first time back holds the reason that we have the highest chance of still remaining that same supply-demand imbalance. But as we get multiple times back, obviously this is getting weaker and weaker in terms of prices consuming more supply on each hit until such a point that price breaks out. Now, the overall picture is not as simple as that. Why? Because supply and demand is not static, it is dynamic, it is ever changing. It's not a case of there's 100 orders sitting here as supply, this consumes 20, this consumes 20, this consumes 20, this consumes 20, then we break out because it's all consumed. Supply and demand is dynamic, not static, is ever changing. The order flow within here is ever changing. That's why trading is not as easy as it could be when it comes to trading supply and demand. But all we can do is look at this and say each time price hits it, it is consuming some supply. And then we look at the rejections, the type of rejections, the strength of the selling buying around these areas to conclude whether it is being consumed, whether it has been consumed, and whether a breakout is more likely or another rejection more likely. Okay. Going back to this slide. If we have a false breakout, we want to see signs of true rejection, i.e. if this is support demand, if this is a false breakout of support demand and this is the false breakout bar, we want that to be true rejection and for price to have follow through momentum, okay? What we don't want is obviously this to be demand consumption, just paving the way, just consuming the demand down here, paving the way for price to have another leg lower. And one of the ways we can conclude that a bar is more likely to be true rejection rather than demand consumption is the size of the false breakout, okay, as well as the preceding price movements into the false breakout. A very strong downtrend and a tiny false breakout, for example, is more likely to be telling us that this bar is just demand consumption paving the way for a move down, okay. A sideways moving market and a materially sized false breakout that just stands out in terms of rejection is more likely to be true rejection and signal follow through momentum back up, okay? Trading false breakouts is all about objectively analysing a setup, okay? But this is one of the things we need to consider. Is the overall setup telling us there is uncertainty with regards to demand, supply, consumption? Doesn't mean it's not necessarily a tradable setup or not going to work out, but if there is that uncertainty, obviously that decreases the probability of the setup working out, and therefore it comes down to risk tolerance. But there are certain things we can do to remove that uncertainty or to find setups where we don't have that uncertainty. And one of the considerations we need to take into account is supply and demand consumption. Okay. So if I go on to a couple of examples here, can't see the full background to this pair, but we are in a downtrend. We have a slight pause causing us a clear swing low. Price comes down. We're in an overall downtrend. We have a, this isn't overly strong, but it's not moving sideways as such, because we're in a lower low, lower high. We're in a downtrend situation. Okay, combine that with a very small false breakout, and what's this more likely to be? Demand consumption paving the way for another leg lower, or true rejection and a false breakout causing good momentum move up. Okay. Now it should be clear that this is more likely to be demand consumption. This false bracket doesn't stand out. It's not a big wick. It's not a big rejection wick. We have decent strength selling. We're in an overall downtrend. Looking at the situation as a whole, obviously more to it than that, which is a topic for a later video. But just looking at demand consumption, this is what we need to be asking ourselves. Is this more likely to be demand consumption, or is there enough uncertainty there warranting either a reduction in risk on the setup or just not taking the setup itself? Okay, obviously that's down to one's individual risk tolerance, but we need to be using that type of an analysis in evaluating a setup. Another one again, more sideways moving, but again we have a strong trend down and a pretty small rejection. Okay, this one is more borderline. It's not as clear as the previous one, but again, this doesn't stand out. We have a strong selling, strong selling, strong selling. Now it doesn't mean selling doesn't get reversed, but the preceding price movement suggests that sellers are firmly in control. We have strong selling here and a very small, relatively speaking, false breakout relative to the overall picture suggests that this is more likely to be demand consumption, or there is an increased uncertainty whether this is demand consumption or true rejection. Okay, devoid of any other information regarding this setup, we can't really conclude with good probability that this is a false breakout setup and to go long. Okay. Now, another way of determining, I said I use the point devoid of any other information. Well, there is other information we can use to conclude that a false breakout is more likely a sign of true rejection rather than demand or supply consumption, and that is finding some clear demand to the left that price is reacted off to cause this false breakout bar. If we can identify that supply and demand, then we know that is the institutional, professional, the large money, and therefore it's more likely to be a false breakout bar rather than demand consumption, because prices hit demand in forming the false breakout. Okay, particularly if it's the first time back to that demand. And this gives us the advantage in terms of we can plan scenarios in advance. We can find support resistance zones, for example, look for a clear supply demand zone and plan for what should happen, what we want to happen, and plan that trade out in advance, just like we can with FTBs. So here's an example. We have a clear support resistance zone. Price comes down. See, this is a sideways moving market around this SR. It's not a strong trend, but we have strong selling into this area. Now, do we expect strong selling? In a way, yes, because we have a breakout of this higher SR and of this swing low here. So we expect the breakout rush, so it's not something to be scared of. But what is important here is we have a very clear demand zone. Okay, this is the source of the overall rally. Price left it with great momentum last time out. It's logical to conclude that this is the first time back to it, that we have the same supply-demand imbalance here. So in forming this false breakout, this gives us a lot more confidence that this false breakout isn't just demand consumption paving the way for a move lower, but it's actually a true rejection from demand. Stop losses have been triggered, which is the liquidity, part of the liquidity that's been used by the money sitting here. We have the false breakout complete in terms of breakout traders are now on the wrong side of the market, and therefore we can expect to move back up to this clear supply zone. Okay. And if we go back to my previous example, but this time add in the supply zone above, without this supply, you could look at this and say, well, first, second, third, fourth, fifth time back, this is now getting dangerous looking for a short. And this, we have strong buying. It's a sideways moving pair, but we have strong buying in forming the false breakout bar. Now it is a decent sized false breakout, it's a material false breakout, but there's still, in the absence of this supply, you'll still be looking at this and thinking, this is fifth time back, we have strong buying, yes we have a material false breakout, but this isn't an A plus setup, if you like. It's not one, there is uncertainty because the number of times back that we could be seeing what happened straight after this false breakout played out, we had the breakout. We should be looking for breakouts because of the number of times it's been tested, and thus the chances that the supply has been consumed. That's right, the supply has been consumed within this SR because price has now broken above it. But we've broken above the SR straight into a supply zone that hasn't been tested yet. So with the knowledge that this supply exists, we know that if this actually happens, if we do get a lunge, a material size false breakout into this supply, which is quickly rejected and closes back below this support resistance, that's actually a great false breakout setup. Why? Because the strength of selling to overcome what is clearly a high concentration of order flow here must be very strong. And because the number of touches back, the number of breakout traders that are caught on the wrong side is going to be large as well, relative to as an SR zone that has 2 touches back. The more touches, the clearer the SR zone, the more traders that get involved, the higher the order flow concentration. Okay, so this actually happening, all because we know that this supply exists, actually tells us that this is actually a very good setup. And you can see price moved with very good momentum. It moved with the same momentum that it moved up with on the way down, straight back to demand. And then we had the breakout. But without this supply being there is increased uncertainty because of the number of times back and the fact that once we have the breakout, price might not look back. Because if there's nothing to stop it there, nothing obvious to stop it there, then this is logical to conclude that a breakout might hold. Okay? That's where having the supply demand zone, which is the institutional order flow, helps us to conclude whether something is more likely to be supply demand consumption or whether true rejection. Okay. So just to summarize, first of all we looked at a recap of video part 1, but more importantly to take away from this video is when analysing an FB setup, we need to consider supply and demand consumption and evaluate whether there is increased uncertainty or there is enough uncertainty whether the breakout bar itself is and the overall picture is just supply and demand consumption, or whether it's a sign of true rejection and a true false breakout. Okay, 2 ways we can do this. Look for materially sized false breaks, i.e. signs of true rejection, or find clear supply and demand that price should react at to cause the false breakout. Now this is more pertinent to swing false breakouts because with SR false breakouts, price is more likely to move sideways. You're not likely to get too many impulsive moves. Whereas with swing false breakouts, obviously you are going against a swing, so you're going to be going against, you're going to be going counter trend, and you're going to be potentially going against stronger trend like and impulsive moves into the FB area, which increases the uncertainty with regards to supply and demand consumption compared to a standard support resistance false breakout. So above all, what you want to avoid, depending on your risk tolerance, but what you want to be able to conclude is that strong trending impulsive moves into the FB area combined with weak rejection, materially small false breakouts significantly increases the chances of that setup being supply demand consumption rather than a true rejection and thus a true false breakout setup. Okay, as I said, whether one trades a setup like that is down to your risk tolerance, but the important thing is to be able to use that type of analysis and reach that conclusion that yes, this setup has increased risk with it and therefore I'm going to take action accordingly, not trade it or decrease my risk on the setup. Okay.